Wow, so huge sell-off day on the market. From our open, we were down about 80 points. And from the close of yesterday, we were down about 330 points. So that's a huge day. I mean, most of it was done from this gap down, but we didn't reverse. We continued down. I'm not going to get into too much about the tariffs here. We're just going to do a normal daily review and look at the 5-minute chart. But from yesterday's close, that is a 5.5% drop. So just think about it. I mean, imagine that. The value of American companies is 5.5% less right now than it was this time yesterday. So that's a huge drop. So we had this big gap down. Actually, I was considering buying right around this open, and I'll explain why. Looking at yesterday's first 3 bars, we were talking about how yesterday had a buy signal above that 3rd bar, and buying above the bar 2 would have been fine as well. So I was talking about how when the market gaps down and then you have a couple bull bars, it's reasonable to buy above that for a swing trade. Well, I was thinking that in this case as well. 2 bull bars, and we had some targets above, like yesterday's open. And also, keep this in mind. This is something kind of interesting. Yesterday was it ended up being a pretty strong bull day. We closed about closed about 130, 140 points above the open. So that's actually a pretty strong bull day. Regardless of whatever was happening on the daily chart, there's going to be some buyers of that close. So they bought the close, then the big gap down, and they're going to try to get out, break even on their trade. So they're going to look for ways to buy lower. And so what they would do is buy above a bull bar like this. And so they have a first entry here, then they add it on here, and their midpoint would be here. So I was looking at this and thinking, if the market goes above that bar 2, then the market will probably try to get back to up here, or maybe the low of yesterday. Either of those would be reasonable targets. So I was thinking about buying there, but the market did not go above that bar 2. So, we won't know. But that's kind of where my mind was at that bar 2, and why I thought it would be reasonable to be buying above that. But that didn't happen, and you can't be married to one position in your mind. You have to kind of be flexible and just basically accept whatever the market's given you. And what it was giving us was that it wanted to go down. So I think the first swing trade, or the first real trade that I thought stood out to me here, other than this possible bar 2 buy, it was selling right here. So let me kind of shrink up the screen here. Let me move my head out of the way. So bar 4, at this point, all the bars have been inside bar 1. And as we move along, we're starting to get, we have this bull, this little tail up. So the bulls are trying to go up. They're not able to. And when you see this sideways movement like this on the open, where the bars are large, but it's just not really going anywhere, that's a breakout mode pattern. So the market is looking to try to break out one direction. Look at the size of this initial range. It's about 32 points. And that is fairly small compared to our recent day's range. Like I was saying yesterday, it was like 100, 150 points. I mean, that's a huge bull day there. So this opening range is relatively small compared to the average daily range that we've been having. So that what that tells us is that this range is not going to stay this size. It's going to break out and probably double or even triple or more. So looking at this, this first part here, by bar 5, you should be thinking that. You should be thinking this is a breakout mode pattern. The market is looking for one side to break out and win. And the first reasonable entry there would be selling here. Considering the big gap down, big gaps down lead to a higher chance of trends. It doesn't really matter which direction that trend is going to be. All it means is the odds of a trend go up. And then when you're having this breakout mode pattern, possibly double top. So first top and then the second top here, and then this bear bar. Even though the bear bar is not closing near its low, it's still closing below its midpoint, and it's a breakout mode pattern. So you'd want to be trying to swing off of that, and at least going for 2 times your risk. Probably try to go for 2 times your risk and then take off half once it gets to 2 times. And if you were able to take that, then that would have been a perfect trade, and you got it out before it reversed back up. But I really want to draw your attention to that, and that's what we would call a breakout mode pattern. When you have a range on the open that does have big bars, but the range isn't that big because it keeps reversing, that means the market is looking for one direction to break out of. And then you want to try to find a swing trade to take off of that. And you can go back and look at prior days, and you can say, well, you might have been wrong 2 or 3 times before you would have gotten the right trade. And yes, that will happen. Sometimes you get it on the first, though, like this. And when you are able to catch the right trade, even if you lost 2 or 3 times in a row, that fourth one can offset all those losses and then give you a lot more if it's really going to be in a strong trend day. So I like this first sell we have marked here. And as the market's going down, you do want to be thinking about how to get short, but unless you're going to a lower time frame, I find it difficult to be shorting here on the 5-minute, at least for how I like to trade. So holding your short here, that's fine. But then as you get down into these levels, look, you have the low of the overnight low here. And then you have this measured move off of this first opening range that's here. If you're shorting here, you're shorting right into that. And we can see, actually, we actually got the first bounce occurred at this level. We got this pretty significant bull bar that happened right here. This was a 20-point bounce, 23-point bounce that happened right there at the measured move target and at the overnight low. And we are pretty far from the moving average. Now, I don't want to fill your head with that if you're far from the moving average, then you shouldn't be trying to get short. You should. But if you have multiple factors adding up along with that, then I think, it adds to some uncertainty, and it's better to just hold off. So I'm not going to have a short marked through here, at least on this part. After this pullback, I like the idea of getting short below this second bar. And once again, this needs to be a swing trade. I think the odds are a bit uncertain. You would be trying to sell back into these levels, but you've already tested it once, and this might be the time that it breaks through. So I think selling here is okay. Now, so let's look at what we got going on. We are in a bear trend. Clearly, there's some kind of support, or there's clearly some kind of resistance right around this level. You see the tail here, another time. So a lot of little tails occurring right in this area. And we have a gap. This low and then this high did not overlap. So bulls that were buying here are struggling to be able to get out at their first entry. So they bought here, bought more lower. They're struggling to get out at that price. And then we get a bear bar, and then a second bear bar. So then the bulls are really feeling trapped, and they're going to be getting out below a bar similar to this. So that's why I have that marked. Swing trade would have been a great swing trade. Once again, I don't think the odds are high enough for a scalp. So I would only take that if you're willing to hold that for a swing trade down. There's a wedge here that did end up leading to a reversal, a bottom for the next couple hours. But you really didn't get a good entry. So however you draw the wedge, maybe you draw it like this. So first, second, and then this little third push here. Well, there's really not a good entry here. I mean, I don't think you should be trying to buy above this bull bar. I'd rather look for more of a double bottom. And then this bar is just way too big to be buying above. I mean, it basically gets halfway back to the moving average, and at that point, you don't even have that much room left for the moving average. So, I'd rather not be buying. I really couldn't find a way to buy through here. There's this bull bar after a larger wedge like this, but it's following 6 bear bars, and I'd just rather not be trying to buy after those 6 bear bars. I mean, if you're going to take that buy, it has to be a swing. Clearly, your odds are not high enough to do a scalp. So, let's say you're trying to do like a 1-to-1 scalp, something like this. Trying to buy against all this selling, even though there is a wedge, that the wedges really need to be used for swing trades and not for scalps. So, rather not be trying to buy there. And then we do get a wedge on the way up. So we can see there's 3 pushes there. And so I like the idea of trying to sell below this bear bar. So first push, pull back, second push, pull back, third push. And also, double top of the moving average. And there was actually a pattern that was pretty similar to this on, it was one of these days when the market really started selling off aggressively, when it started to sell off aggressively. We had a pattern that was pretty similar to this. It's just like a classic pullback to the moving average, and there's a wedge pattern, and then it continues down. So that's what the idea of selling there was. Market ended up having one more leg up, and then that's when the market kind of curled back over and gave up. If the market had gone up here above this bull bar, probably could have considered buying above that for a swing. And the idea there would be that we have this wedge that is failing. So if a wedge is failing, that often leads to a trap, and then the market heads in the other direction. And if that was going to be the case, then this whole move here would be a trap, and the market would be shooting back up to overnight highs and higher. So I think if the market had gone above this bull bar, that'd be reasonable to try for a swing trade. And this, you need to do that for more than, this would be more like 3 or 4 times or 5 times. You're really betting that all these bears here are wrong, and then that the market's going to shoot up after that. So I think that's kind of more of a unique trade, because your risk reward would be, it'd be so skewed towards a low probability but high reward trade. But you didn't get filled there anyways. But that's just kind of an idea, something I was pointing out there. Ultimately, you did end up getting a wedge that worked. So first, second, and third. And we draw the wedge from the first 2 highs, and so first, second, and that third is overlap. So it actually got a little bit parabolic here because it went above the wedge. Market gets back below the moving average. So now this wedge is in play. And then we're basically looking for, is this going to continue down? So so your mind should be back towards looking for shorts in this area. The first scalp little mark is here. So strong selling on the open. We had this pause, and now the bears are back below the moving average, and they're looking to get short. You can see this area of support and resistance. So tested here, broke out, tested it here, broke through it, came back and tested it, and now we're below this, and we're below the moving average. Then we're getting this bear bar, this bear inside bar. So when I see inside bars like this, I imagine that the bears are trying to accumulate their shorts, and that's kind of what comes to my mind when I see a bar like this inside of a previous bar. And so I think this would be okay for a scalp. So just thinking about going for 1-to-1, selling below that, then there's your scalp, because I think this is higher probability. I would see the bulls as being trapped in this area, and they'd be getting out below that bear bar. So that'd be more of a scalp. What about selling below this bar? After 3 bars up, I'd probably not want to sell below a first bear bar like that. You know, you could say double top here, and that'd be fine. And I mean, if you're just taking swing trades, that's probably okay to take. But I'd rather wait after 3 bull bars up like that. And then this basically went straight down. So unless you're, if you're going on to a lower time frame chart and taking short trades on like little pullbacks through here, I think that's fine to do. I probably wouldn't want to be taking any of these on the 5-minute chart unless it was like this doji bar here, this with the big tail on top. I'll mark that kind of just to draw attention to that spot, because what you would have is this bear closing below these lows, and then this tail is acting as a big pullback that's failing to go above that level, and then coming back and closing as a bear body. So if the market's going to go lower, that's a reasonable spot to be going lower. Then in this area, once again, 3 bull bars up. Probably don't want to take the first short, especially since we're kind of low in what could be a range now. We're down towards these lows. But then you get a second entry short. So I think it'd be good to try to look for a short, second entry short and a bear move. So either selling here, which is a bit of a doji bar, didn't actually have a bear close, or below this next bar. And once again, I think best to try to do swing trades on these. So looking at the daily chart, well, it's starting to look like a bit of a mess here. Some ideas. If the market's going to go lower, where is the target? Well, first thing that comes to mind is this measured move. So we had this strong breakout, pull back into this trading range, and then a breakout of the range would put us down around 5,200. Today closed on its low. So, I mean, this last bear close was the lowest close of the day. So that's pretty significant. That means bears were willing to sell into the close. Even though they're so far from the moving average, they were okay with selling into the close. That means they had some confidence that their market would continue to go down. It does look like the market's going to have lower prices. Are we still going to be in a trading range? Well, to me, it does look like we're going lower for maybe another day or another week, and then there might be in a bigger trading range. Maybe we hit this target down here, and then this is the low of the trading range. After, it's tough to say because this could end up being a second leg trap. So first leg pullback, and then the second leg is this is what the traps are designed to do. They're designed to look very strong, and then they end up just being a trap. So you see this 330 point sell off, and you say, oh wow, that's really strong. It must have some follow through. It's going to go lower, and it might end up just being this second leg trap. So first leg pullback, second leg looks stronger, but then it ends up being bought. That could be the case. I do think there's going to be more follow through selling on this. Tomorrow is Friday, right? Yeah, tomorrow's Friday. That'll tell us a lot, because we had Monday, Tuesday, Wednesday, now Thursday. Does Friday close on its low for the week, or does Friday pull back and then this week ends up being a doji day, a doji week? So I've been talking about how it's okay to be short with a small position. That's still the case. After a 330 point sell-off, though, I think it's reasonable to be taking some profits if someone was short. I mean, that's a very large drop in one day. If it does end up reversing here, then you're going to give all that back probably pretty quickly. So, I would say at least take partial profits if someone was short there. Looking at the VIX 30, I mean, that's high, but we have not gone above 35 yet. And about tariffs, we don't have any really strong news on tariffs yet. So in both cases, from what I've been talking about like when might we find buyers, neither case has been filled yet. So not looking strongly to buy yet. is what my take is on it. So I think it's still okay to be short. I would take profits if someone was short. I think it'd be best to take profits, and at least partial profits. And then we haven't found, to me, I haven't found a reason to start buying strongly yet. So that's kind of my position on where we're at. Thank you guys for watching. I hope this was a good video. And if you like big moves, then this is the market for you. So if you like that, then I hope that continues for you. Okay, see you guys.